Okay, let's move on. Mixed set of earnings from Mphasis in the second quarter as revenue beat expectations, but margins disappointed. Nitin, Rakesh, the managing director and executive director at Mphasis, the company is now joining in. Nitin, great to have you here. Good morning. Thanks very much. Revenue growth has come in strong, 6.6% constant currency growth. Could you tell us what is the plan with respect to the DXC business? The revenue contribution from it dropped from 16% last year to 6% this quarter. X of that, you are guiding for industry-leading growth. Can growth rates be upwards of 25% as it has been in the first half?
Yeah, I think, again, thanks for having us. I think the performance on revenue growth has been very strong. We've had a pretty broad-based growth, of course, in the direct business. This 6% of revenue in Q2 that you just called out for DXC was very much what we guided towards as well, and we guided towards a mid-single-digit percentage of contribution to revenue. So I think that's where we are. We're heading towards that number. The direct growth has been 30+% for the first two quarters on a YOY basis. Sequentially, both the quarters we've seen almost a 10% growth in the direct business, 9.8, 9.9% in each quarter. So very strong momentum, broad-based growth coming from all geographies, all verticals, and of course, applications transformation driving that growth as well. So I think quite comfortable that we should be able to sustain this level of growth in the direct business. And that's why we're calling it to be a market-leading growth for the remainder of the year as well.
Okay. Let's also talk about the other big aspect, and that is margins, and that's sort of the concern for the whole overall industry. Nitin, what is your expectation, and are you going to keep your EBIT guidance? Rima tells us that it is between, I think, 15.5% to 17%. Given the whole talk on attrition, what do you see happening here?
No, I think firstly, the adjusted margin, adjusted for the M&A expenses, is at 15.8, which is almost flat compared to last quarter at 15.9, well within our guided band. I think we saw the headwinds on supply. We called it out last quarter as well. We feel confident that at an operating level, we can sustain this level of EBIT in the business on multiple reasons. One, I think growth definitely gives you some operating leverage. We are prioritizing growth, and hence our level of investment in the business continues to be fairly robust. And also, keeping in mind the pricing environment, I think this is a conducive environment for pricing. We called that out as well last quarter. So I think there are puts and takes, but at an overall company level, we are fairly comfortable that we should be able to sustain profitability in a very tight band that we've called out for while we are prioritizing growth. And that's the reason why focusing on that industry-leading growth is really a top priority for us.
Okay, industry-leading growth. Nitin, hi, good morning. This is Sonia here. So where will acquisitions fit into this whole piece? Because you recently made an acquisition of Blink Interactive, I think for a little under $100 million. What kind of revenue generation are you looking at because of that acquisitions, and any more that you plan to do over the next, say, 12 to 18 months?
Absolutely, Sonia. I think the reason we announced the acquisition just before the end of the quarter was really to do with the fact that we think there's an opportunity for us to expand our target addressable market, starting with design, research, and then, of course, experience. That gives us the ability to actually go after spend that is traditionally not seen in the IT services space, but comes more from the business, product side, marketing side. So I think very much part of the thesis, design is becoming omnipresent in almost everything we do, whether it is a customer experience, whether it is internal developer experience, stakeholders, advisors, and all of the allied stakeholders in the business. So that's one big bet we've already made. We've also talked about the fact that we will continue to look for opportunities to expand capability, competency, and continue to focus on the expansion of the addressable market, per se. So you can expect that we'll continue to look for opportunities to do that on a pretty sustained basis. This was our second acquisition in the last 12 months, at the back of a data company that we acquired in the UK in November last year. So I think that the whole build by partner thinking, buying is very much part of the thesis of building capability. And then, of course, with Blink, we also got a set of 10 Fortune 500 names that were not in the mix, for us before. So that becomes the second thesis of acquisition here as well. So again, the idea really is, can we find new engines of growth? Capability, competency is one, and of course, customer base or geography is the second.
Okay, so Nitin, putting all of this together, I'm going back to the top line. So the DXC business and the fact that it's declining, but perhaps the other parts making up for it, some of the inorganic moves that you have made. I wonder if you'll make more. What's the sort of thought process with respect to headline growth? Are we looking at 20% plus sustainable numbers? Are we in that sort of a cycle, multi-year cycle? And if yes, then again, which piece is going to drive it? Inorganic, the base business, DXC, which one?
I think the short answer is yes, we are very much in the early stages of a tech investing super cycle. As the DXC impact continues to get more and more muted purely because now it's 6% of revenue, I think the convergence between direct growth and company growth will start playing out as well, over the next couple of quarters. So, we are definitely quite comfortable with the fact that we've been able to generate enough pipeline and enough demand with the customers and the business. So I think a pretty conducive, tailwinded demand environment. Definitely opportunity to continue to accelerate the overall company growth while maintaining, as I said, the market-leading growth on the direct business.
Nitin, on the hiring side, most companies have increased, guidance in terms of how many fresh people they will have to hire because of the demand side of things. Could you talk to us about what is the roadmap there?
I think we've basically used almost all levers of supply chain. We've called out for the fact that we've expanded our supply chain into newer markets, newer geographies. We talked about Taiwan, Mexico, Costa Rica, Eastern Europe, and Canada. We've set up centers in UK and Germany as well. So I think that's one part of the expansion. The second part, obviously, is talent reskilling. I think we have a very robust talent reskilling platform called Talent Next. We've used that very aggressively in the last 18 months. And we're obviously hiring at almost every part of our supply chain from a pyramid perspective. So yes, more hiring at the fresher level, continued focus on upskilling and cross-skilling, and expansion of new supply chain engines coming out of other parts of the world as well.
Just one final question from my end then. Attrition is a big problem across the board. We were speaking to a couple of managements who told us that it's reached a stage now where it's affecting, the sort of the demand fulfillment as well. Is that a situation at your end too? Because you do have a higher exposure to Bangalore, to hiring from Bangalore, where attrition is high right now. What is the number and how much of a concern is it for you?
So Sonia, I have a slightly different philosophical point of view on this, right? The reason why our industry was actually formed was because of lack of talent and supply. So I think it's as much a headwind as it is a tailwind for us. The ability to hire is only one part of the equation. I think the ability to create net new talent is really what differentiates a good business from the others. And I think our focus always is, can we create net new talent in every market, every geography that we're operating in? So it's definitely a constrained supply environment. But that's the reason clients come to us, because they either can't execute those projects because they don't have the talent, or they can't find the talent when they want to grow and expand. So I think that's very much part of the equation. And I would rather be in a situation at an industry level where we have more demand than supply, because trust me, we will find, as an industry, we'll find ways to solve the supply problem, and we'll find ways quick.
Thank you very much for giving us color on the business, and good luck for the second half as well. Thanks for joining in. Well, as we take the break, I'm just updating everybody on the Evergrande news that yes, it seems, if you go by Chinese state